Good afternoon. How are you, analyzing the volatility which is set in its election year? Last 45 minutes, we saw glimpses of that volatility come back, triggered by indications from buy polls in UP and Bihar. And do you think investors and traders will have to factor it in while their activity this year?
So I cannot say much about the traders. They have a different world and different life of their own. But for investors, after 2 years of absolutely magnificent returns, this is a year when sanity should set in, and this is a year when, instead of taking call on the broader markets, it is the quality of businesses which should come to force. So that is more important in case of this year. So for investors, it is a great year of opportunity where quality businesses can be picked in individual capacity, taking a 2-3 years of view. And just a step back, this is a kind of year where one can take a 2-3 years kind of a view. One can analyze businesses deeply, breathe, and then just sit tight on it. Businesses will work and definitely bring some great returns to the investors. So not taking a view at the market, being stock specific, looking at the quality of businesses, and you have that luxury of time, and nobody is expecting that the markets will run away this year like they have run away in whole of 2016 and 17. So when do you get a situation like this? So for investor, it's a great time. Of course, you will not get a broader market returns, which one should not be very keen on, because if you get a third year of consecutive return on the broader markets, it's not a great situation to be in, because then there will come a time.
Little healthy, because you can have 3 years of good market returns coming by. Sindhu, we will talk a little more about the domestic story. We spoke about elections. I also want to talk about the fact that abroad, the flows that come in from FIIs may perhaps see a halt, because we are looking at an advancement of sorts of the rate hike cycle in the US. It may prompt FIIs to actually look at advanced economies where the economy seems to be recovering, Europe seems to be recovering, US seems to be recovering. Does that put markets like India further at risk?
No, it's the way you look at it. Yes, there is a global recovery, and the world has been begging for a global recovery for last 7, 8, 9 years. You have a earnings recovery coming in India. There is definitely a situation where the flows globally available to salute business recovery are, if I can use the word, they are infinite. Now I can feel very pessimistic that there is recovery happening in Europe, there is recovery happening in America, and the capital will go back to the domestic shores of those respective geographies. At the same time, I can motivate myself that after 5, 6, 7 years, India is headed for a serious earnings growth. So if 3 wheels on which it is riding, one wheel
we have a bad line there. Sindhu, Samir was actually making a point that if one were to take into account the way last 2 years have been for broader markets, it has been handsomely rewarded. This year, even if you count a flat to negative year, it is good consolidation, because eventually global growth coming back after 8 years and earnings growth after 5 years are coinciding. So platform will be made for growth ahead. Sindhu, let's talk about the theme which you were kind of hinting at. Businesses which are well managed and the earning visibility is high. Perhaps there would be a correction at play because of valuations getting stretched a bit. What are those kind of names or themes, at least, which should be accumulated in a phased manner over the next 12 to 15 months, which are ripe for again accelerated growth next 2-3 years ahead?
Okay, so I'll not get into stock specifics, and look at the domestic Indian market. Anything related to domestic Indian market is something which is likely to do well. Now, if we are confident that domestic themes will be doing well, obviously the next theme comes is that who will be providing them capital, and who will be providing them working capital. Then there will be interlinkages. So it's not a very complicated story out here that one cannot fathom that what will be going well or not well. It's just that if somebody is sitting in India and one is conspicuous of the kind of growth which is happening, there are various themes. So of course, if export stories which were not doing well will also be doing well if there is a recovery in America, and there is a very imminent recovery in America which has already been seen. So that part of the business can also do well. But primarily, if one can focus, then domestic stories, domestic themes, be it consumption, and these are themes which are not new. So you don't need a new set of capabilities or skills to appreciate these things. These themes have been there for last 2, 3, 5 years. It's just that the trajectory actually gets a upward gradient, and at the same time this growth will be accentuated. So one need not to be very deep into the whole thing. It's just look around, you'll find many domestic stories to invest in.
Sindhu, when you say domestic stories, can I put my neck out and say perhaps consumption?
Of course, consumption is a story. Look at the Indian GDP numbers. Consumption is a theme. And more Indians, if they will get from subsistence level into consumption, so obviously consumption themes will emerge. Of course, one needs to be pragmatic, one needs to be conscious and cognizant of the fact that one does not end up paying a very high multiple. Ultimately, the earnings are there. So earnings is what you get and multiple is what you pay. So if the valuations are completely not in sync, if one is not comfortable with the valuations, you're free to avoid these stories. But if the earnings growth is visible and the valuations are not completely out of sync, one has to go for these themes. At the same time, if one takes a long-term view, you cannot make a long-term mistake in these themes. So you can be wrong for short-term, but if one is ready to take a 3-year, 5-year or 10-year view on these stories, it's very difficult to make a big loss in these themes.
Sindhu, when the earnings cycle actually turns the way it is turning for last 1.5 quarter, perhaps the next coming quarter also would see bigger signs of that. When this cycle turns, how prolonged can it get, or is it very gradual? Wanted to understand because last couple of cycles it has been quite far away. People have forgotten how earnings cycle actually turn and how prolonged can it get.
Okay, now let's talk of earnings. Now, for last 3, 4, 5 years, when the world says that the earnings have not grown, essentially they should paraphrase that thing and say that on an average the earnings have not grown. Now, if one has to either buy the entire market to be really worried that earnings on an average have not grown, otherwise there have been fantastic pockets of growth which have consistently delivered over last 3, 4, 5 years. Now, if an individual has to invest in 5 to 10 good companies and on an average also earnings have not grown, there are enough opportunities to buy good companies at reasonable valuations and make a significant difference to one's portfolio. So if earnings are coming well and good, and they are surely definitely on the anvil, even if they don't come, and if you are an investor who wants to buy the entire market in terms of index funds, there is little to worry. So earnings come, it's really very good. But even if earnings are not coming, then all one has to do is to buy a certain set of good companies which have been delivering growth for last 4, 5, 6 years and will potentially be delivering growth. Am I here to buy the entire markets, or am I here to buy a certain set of good companies to benefit from the miracle what is known as capital markets? That's it. That's the reality of being an investor in Indian markets, or for that matter, the global markets.
You vaguely spoke about valuations. Sindhu, I just want your opinion on NBFCs. The reason why I want that is because of the entire scandal that has broken in PSU banks. A lot of people are actually looking at NBFCs because on one side, there is that potential of gaining market share from PSU banks because they will become a little more reluctant to lend. But then, of course, there are the fears that valuations are very high for NBFCs as they are for many consumer names. But do you think that with the recent correction, a couple of them may have become a little attractive?
I definitely agree with you. One thing is for certain that NBFCs are not going away. NBFCs are a variegated platform. It's not that every NBFC is a clone of other NBFC. Now, one has to see that NBFCs, are they delivering a social utility? Are they delivering a commercial utility which is not being currently catered effectively and fully by the banks? The answer is a resounding yes. NBFCs, you can recoil that some of them are definitely very expensive, but whether they will be here for good, the answer is yes. Now, there's been a spike in yields, and definitely the multiples are looking even more ugly. Then one can wait, but definitely this is a kind of asset class, this is a kind of a space for longer term one needs to remain invested. I cannot talk about specific names, but there are enough classes in NBFCs which will definitely weather this storm, and this storm 1, 2 or 2 years will definitely get over. Now also then at a philosophical level, when does one buy stocks? When there is everything good in the stocks and is reflected in the share price, or when everything bad which potentially can go around the business is reflected in the stock price? So if that philosophical question is being answered as yes, one is welcome to go for the top class NBFCs in this space.
Right. All right, Samir, we'll let you go on that one. Thank you so much for joining us on the show today.